Tariffs are rising, customs lines are longer, paperwork stacks higher. Banks are winning as rates bite and balance sheets swell. Tech is cooling. Investors rotate from moonshots to cash flow. And China is rewriting its growth playbook. Spending shifts, supply chains move. All at once. Here's the global economy. Fast, clear, zero panic. First, tariffs. The U.S. nearly slapped 50% duties on Indian imports. Lawmakers now warn that move could spike prices at home, raising costs for shoppers and squeezing small businesses. Mexico followed with its own tariffs, adding friction to supply chains already rerouting. Result? More delays, higher compliance costs, and fresh inflation pressure. Just as economies try to cool. Second, money is rotating. Investors are trimming big tech bets and shifting into banks. Tech leadership eases while bank indexes climb. Classic rotation, not a crash. Positioning, not panic. UBS just hit a 17-year high after Swiss regulators floated softer capital rules. Signal received. Friendlier conditions for lenders. Financials gain breathing room. Margins look better. Risk appetite inches back. Cautiously. Third, tech cools. Policy bites. As rates stay higher for longer, growth stories face tougher math. In Asia, Vietnam chooses regulation over restriction for crypto, aiming to police risks without smothering innovation. Translation, clearer rules, fewer scams, and a path for legitimate projects to operate in daylight. Fourth, China pivots. Beijing is steering growth toward domestic demand, household consumption, services, and steadier, slower expansion. Priority shifts from breakneck speed to balance, jobs, confidence, and predictable policy. Expect more support for consumers, vouchers, tax relief, and targeted housing easing, lifting services like travel, health, and education. Meanwhile, fewer grand construction sprees and less credit-fueled property binging, stability over spectacle. Net effect? Exports share eases while consumption share rises, giving industry a longer runway to retool in EVs, batteries, and chips. The global economy isn't collapsing, it's recalibrating. Tariffs, bank momentum, tighter tech math, and China's pivot are reshaping the map. Markets adjust faster than politics. Stay nimble, read the signals, and you'll be early, not surprised.